Hey, it's Clay, and this will be a video chart on ticker symbol INPX. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like several days worth of time, it's actually today's price action broken down into 30-minute time slices. I like through this time frame, I think it's a good job of telling the quote-unquote story of the price, and then makes mapping out levels of support and resistance a bit easier to see. I don't mean to state the obvious, but I will anyways. Pretty crazy day. Price action all over the place. And the chart's kind of sketchy now because, yeah, the price made a great move, but at the same time, you know, the price had a relatively deep pullback, but it's not like the price crashed. So there's definitely kind of a lot of middle ground here. So what I want to do is focus on, you know, a single area and then kind of look at a couple different scenarios, and that'll help hopefully kind of clarify the sketchiness here. And that key level is at 15 cents. Why is 15 cents important? Well, let's look at the first thing. And I'm not saying this will happen, but just, you know, as one possibility. And that is the price comes down to 15 cents, breaks below it, and then just continues to the downside. What would that be doing to the price at that point in time? That would literally be putting the price right back inside of this range that it just broke out from. Again, going back, not a sign of power, not a sign of true strength. In fact, I would argue that would make this a pump and dump because, I mean, the price has already made a very nice move. From here all the way up to there, and then all of a sudden, if within just a day and a half, the price is right back to where it started, I mean, that by definition is what a pump and dump is. Again, I'm not saying that will occur, but, you know, that's kind of one possibility of 15 cents. And at that point, yeah, that would just be a bearish chart, and this whole move was essentially just a fake, breakout. Now, on the flip side, the price comes down here, but in this situation behaves in this manner before starting to work its way back upwards. What would you have in this situation? Well, you'd have a set of lows here. You'd have these lows down here. If you picture each one of these as stair steps, well, hey, now you have stair steps progressing in the upwards direction. And that would be a sign of overall bullishness. So really 15 cents is kind of the vocabulary definer here, meaning if the price is staying above it, well, that implies making progress, which is bullish. If the price doesn't hold above it, then that would imply the price is going back to where it was, which implies bearishness. So if you haven't connected the dots, 15 cents, very, very important level. It's kind of like the vocabulary definer here. So let's see if the price can stay up above 15 or not. One of the biggest questions I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.